Hi, this is Bo Yoder for 3D Apex Trading. Welcome. We're going to get into a little bit more market forecasting. We haven't really done one of these in a while. There really hasn't been a high probability setup in sort of these three markets we like to show you, the S&P, the gold, and the silver markets. However, I think it's probably a good time to do an update as there are some things that are likely to happen that I think could get some people in trouble. So actually, let's go there first. If we go right to the gold market, the GLD, which is our index proxy for physical gold, commodities gold, they're all going to be loosely correlated. So if you get a sense for market direction with this, it's a great proxy and can help you in whatever aspect of gold that you happen to be active in. So what do we see in gold? Well, the first thing is, and I don't know if you've been seeing people write about this in the press, but people are talking about how inflation is under control. Gold's a bunch of paranoid wackos. They're really down on gold. There's lots of negative media on gold, which I find fascinating because, as we've talked about in some of these previous videos, the gold market really has shown signs of bottoming and maybe making a more significant bottom. We talked about this bullish cycle, nailed that down pretty nicely in a previous video. Since then, you can see there's been a lot of choppiness. Not a whole lot going on there in terms of predictability or high probability trade entries. But I wanted to make this video really because of this head and shoulders pattern. Now, head and shoulders pattern, for those of you who aren't familiar, a classic technical analysis pattern. This is called the neckline. That's the trigger point. So you would expect to see the market come down here, break that level, and then just fall out of bed and go strongly to the downside. So one of the things that I love about 3D Apex is its ability to predict pattern failure. So here we have a perfectly valid pattern. Lots and lots of people are going to see this as a shorting opportunity or an excuse to take their profits in gold and get out of that market. But I see something different because I have the secret knowledge that others don't, based on this proprietary power indicator that we've got here. It's one of the core tools within our 3D Apex instrument set. So you see these bulges in power. They tell you an awful lot of information. When they're above this little gray line, this little neutral line, we consider them bullish, below bearish. Very, very simple and intuitive tool to use. There are a lot of interesting little nuances, and in fact, if you'd like to join us for some training and see some of these concepts played out live, especially some of the forecasting elements and some of the price patterns with a little more detail, go to themarketdoctor.com. Let's go ahead and type that out for you here. We're scheduling free webinars, free training to offer information to a new group of people this week and perhaps the next. So I don't know when you'll have seen this video. If that page has expired, then I'm sorry we missed you. But if you're getting this in time, definitely go to themarketdoctor.com, throw in your name and email, and join us for a live webinar. So we'll do some training on those. But anyway, here's what I like about the power indicator. Very intuitive. Power is going down. Whoops, let's turn that off. Power is going down. Price is going up. That shows exhaustion. That shows that even though price is going to the upside, it's not really very well sponsored because this power indicator uses basically it's measuring order flow. It's measuring passion and energy coming into the market. So prices can go higher without a lot of sponsorship. But that means that those prices are likely to be unsustainable and you're likely to get a vicious snapback. Ding, 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 there's your vicious snapback. So beautiful market prediction there. It's a great tool to use to tell you when to get out of trades. If you were in that trade off the pullback, as we spoke about from a previous video right in this area, that would be a great reason to get out. So it would have gotten you out right near the high of that move. Very clear disconnect between price and power. So once you kind of understand that concept, now you can see why I'm forecasting that this head and shoulders is going to be a false prophet, a failing price pattern. So we've got this very bearish price pattern, but look at power. Power is just going up and up and up with more and more passion. The last bullish bulge here is just totally eclipsed the previous one. Hasn't quite gotten up to this level yet, but it's close. It's not that much more before it hits that level. So what is that telling us? Well, it's telling us that even though price was going down, bullish power was building. And now bullish power is actually really starting to reach a peak. Even though we're rolling over here, that's just a price cycle. These price cycles come in waves. So what is this predicting? Well, If this were a trending stock, it would predict that the market is going to pull back to support and then move up to a new high. However, I think we're gonna have a liquidity pool event. All right, there's going to be a lot of orders right around in this area, which is going to try to attract price. Price is drawn to liquidity. It's drawn to the areas where the market is likely to do the most business. This is because many of the market participants that can really move markets are paid on order flow. So the more orders that go through the market, the more money they make. Therefore, it's in their best interest to sort of test these areas that are going to be important for a lot of people and that are going to trigger a lot of executions. That, in a nutshell, is one of the real reasons why markets are always testing highs and lows and support and resistance elements over and over again. Because those are the levels that people think are important, therefore they are important to those who make money based on their liquidity, doing market making operations. I'm one of them. So what do I think is going to happen? Well, like I said, in a free market, you probably see a higher low, higher high combo. But in a liquidity-driven market, I think you're going to see a move down to this low. Definitely take out this low, get everyone short, and then one of two things will happen. You'll either get a complete setup and then short squeeze, taking us back up to this 200 period moving average, which would be my price target for that trade, or even better, comes down here, retests those lows, makes a double bottom, and then goes back up. So definitely be watching for that. It's probably a week or two away from any potential setup, but I wanted to make this video today to really give everybody a heads up to not get suckered in on this head and shoulders. It has all of the evidence from our instrument panel that it's likely to be a false setup. So wanted to get that out there and hopefully at least be of interest to many people and maybe save a few people some money. All right, so let's take a look while we're in the precious metals world at silver. Because silver actually is a bit more bullish than gold, although of course they're sort of loosely correlated. In silver, we had just a radical push to the upside, and you can see that that push was definitely confirmed by this nice bulge in momentum, bigger than the previous bulge, right? So you got momentum moving up along with price. That shows a strong and healthy market. Then you had a period of choppiness and digestion, a lot of bearish energy there in that initial push down. Then you had a quick little rally and another push to the downside, less momentum, right? Lower prices, higher momentum indicates a reversal is pending. Doesn't necessarily mean it's going to happen right then. You have to use other tools in our tool chest in order to time that, but it sort of gives you the heads up. It's as we say, it tells you the market is conducive to reversal. Then you can start looking for actual signs of reversal behavior. So we got that reversal. Although it was minor, came back up, chop, chop, chop. It's actually broken up through the moving averages now, and you can see that it's doing so with waves of higher momentum. So you actually are having power building to the upside. So even though the price action isn't all that bullish, the power is telling you that good things are likely to happen. So I'd definitely be looking for this market to hold somewhere in this support zone. Maybe a little false breakdown, or maybe a retest of chart support down here around 1980 before it reverses. But I would definitely expect this market to reverse and reach back up to test its moving averages and its prior high right up around the 2340 area. So gold and silver, a couple of interesting opportunities there pending. Again, the probabilities now, these forecasts that I'm offering to you may be of use if you're trading intraday. So on the gold side, I'd be trading with a bearish bias until that head and shoulders sets up. There's probably going to be a lot of liquidity around the head and shoulders setup zone. So if it does indeed test that level, it'd be a great place to do some market making, do some intraday scalping, really surf that liquidity and that order flow. In the silver market, not as interested. It's a little more chaotic, but if it reaches a crisis point into support, breaking down, you've got lots of power there telling you that basically the market is just looking for an excuse to do something bullish. So yeah, that's your goal. Keep an eye out for that. See when the price action confirms that the bulls are coming back into that market, and that could offer a great trade. We'll keep an eye on that and probably get another update out here with a different forecast if that occurs. But let's move now to the stock market, because we saw some interesting indications of power that disconnected from price. Here we have about as traditional as you can get. Let's actually look at a weekly chart so that we can get even more clarity here. I mean, this is a dying market. You've got a market that's got power move up, power move up, power move up, power move up. So you got four new highs, four all-time highs for the market in the Dow, I believe it was. S&P, if we look, actually we could look at. Let me turn that off for a second. If we go back to a really deep chart, let's look at a yearly chart. You can see here that we also have reached that all-time high for the S&P as well. Okay, so what's interesting about that weekly? Well, we had those four pushes to new highs. Let's go ahead and just kind of correlate that down here. The next high, you actually had bearish momentum. The next high, you had even worse bearish momentum. And now on this high, you haven't even broken to the bullish side. So this power is trending lower, 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 lower. Each price cycle is lower than the other. Even though price is higher, there's no passion there. Well, it doesn't take too much fundamental analysis to really get to the bottom of that. Well, the Fed is buying the market. The Fed is printing tons of money, and that's putting liquidity into our markets. We don't have a lot of retail participation. There's a lot of leverage currently being used. There's a lot of people talking about levels of leverage being similar to that of 1987. This market is due for a break. What is a break going to look like? Well, if it's a true market break, then honestly, you'd be coming back down. First stop would be somewhere in here. So we're talking about 140, 147, 145, something like that. That'd be a pretty significant move down and ruin a lot of people's days. And again, this is a weekly chart, so it'd probably take a while to get down there. You can see really the last break we had over here was only about a 3-week event, but that was also fairly significant. And actually, I don't think I can quite project, but let's see if I can actually do this. Hang on a second. This will be interesting. So the last market break went from a high there to a low there. See if I can drag that forward. Yeah, there we go. Markets tend to do things, pardon me, with a rhythm. So the last market break, took us down about that far, and sure enough, if it were to fall the same level, it would take us back to these zones of support, right in that 147-ish zone. So very possible that we'll get a break at that level. Then, honestly, I can do very well with market forecasts one price cycle out. Beyond that, it's a lot lower odds. So at that point, I believe that we're going to get a lower high, lower low, and the market will continue to go lower. But until I get some power indications, until I really see the market posture, that's just a pure guess, and that's not what we're here to do. So from the evidence perspective, using our 3D Apex methodology toolset, we have clear evidence on the weekly, and that evidence is backed up by the daily chart that we have power going lower and lower and lower each time that we have a new bullish surge that takes us off to new highs. So what do I think the market's going to do? Well, very, very much like the gold market, I think the best trade is probably coming. It's not here now. I would definitely not go short right at this moment. I think you can learn a lot from this little dead zone up here. I think that's what we're going to see. I really don't think we're going to see a real panic as we see here. I think we're going to see some choppiness. We might get a pullback down a little bit to these areas of support around 173, 174. But I really think that the trade to the short side is going to be on one last exhaustion. So if we get one more push to the upside that immediately fails, that would be a great trade and something that I'd be interested in participating on. But I think we have a pretty high probability of just doing one of these things where we just chop sideways for a little while and then finally break off and head back down. So how is that useful to you? Well, if you're trading based on daily and weekly charts, it tells you that you really probably don't have to focus on the S&P too carefully for the week to come, and maybe the week after that is when you'll get your trades. If you're an intraday trader, maybe trading the S&P futures, the ES, you know that the odds are extremely high for choppiness. So not a great time to be looking for longer term trends, but it'd be a great market for scalping, be a great market for market making. And so a lot of times these forecasts may not tell you what you want to hear, that there's a great trade pending and you can't wait to get on board, but there's still a lot of actionable information there that can help you with insights in terms of what's likely to be useful for you intraday or in a different style of trading, like market making versus trend trading. So with that, you can then also decide sometimes cash is the best position. And never forget, you're not here, or at least you shouldn't be here in these markets to try to find trades that'll make you money. I know that seems counterintuitive, but it's true. You talk to any professional, they're not interested in the profits, they're interested in the risk. So don't look for trades that are going to make you money. Look for trades that aren't going to lose you money, like that Head and Shoulders. That Head and Shoulders is I think, a seductive trade. A lot of people are going to get snookered in on that. You now have some evidence and some insight into why the odds for that trade's failure are very, very high. So that trade, will likely lose you money, and that's a great excuse to steer clear, and maybe even make a little predatory money. Taking advantage intraday of people as the thing sets up and flushes, if indeed that forecast does come true. So with that, I will leave you. I hope you got some valuable insights from our time together today. As always, you can check out the corporate homepage at 3dapextrading.com, or themarketdoctor.com is actually the best place for you to go if you're interested in joining us live for one of our live training series. Currently, it is November the 3rd. We have some training sessions scheduled for next week, and we'll probably do some the week after that. So definitely check out themarketdoctor.com. Register for a live event, and we'll hope to see you there. As always, thanks for listening. My name's Bo Yoder. Good luck and good trading.